What's up, guys? Welcome back. Week 8. I can't believe that it's already been 8 weeks. 2021 is just flying by. Today, I am going to be adding a couple stocks to the portfolio. I was on vacation at the end of last week, so I kind of neglected the Discord a little bit, guys. I apologize for that. Because of that, I'm also going to spend some time. I asked inside the Discord if anybody had any questions they wanted me to answer inside this video about anything money related. So at the end of the video, after we make some buys, check out the portfolio. We'll dive into Discord and we'll answer some of those questions. Like I said, guys, apologize. I was out gallivanting with JJ Buckner, but now I'm back in action and focused once again. If you are new to the challenge, guys, all I'm doing here in this challenge in 2021 is showing that with just $50 a week, consistently over the course of an entire year in simple investments, you can make a difference. In this day and age, everyone's starting to feel like they need to be YOLOing or getting into the next biggest stock that's going to get them rich quick. I am still a fundamental index fund investor, blue chip dividend investor, and I want to show you over the course of a year that you can do that with just $50 a week. What I'm doing is I'm putting $50 into a total stock market index fund. I'm putting $50 into a very, very popular growth index fund, ARKK, and then I'm picking stocks according to the Discord, what I hear in the news, and other things like that. And I challenge you to do the same. Be consistent and let me know. Keep me up to date. How are you doing this year? If you got more than 50 bucks a week, go for that. Do whatever's best for you. But like I said, just 50 bucks a week, guys, over the course of 52 weeks, I think we're going to see that you can really make a major difference in your financial future. Before we dive into Robinhood and check it out, guys, this is my spreadsheet, which is available to all my Patreon members inside the Discord chat. We see at the top VTI, ARKK, and the list of other stocks, guys. If you want to see when I purchased these and really my philosophies behind that, go check out some of the videos. I'll leave a playlist at the end of this video of all of the weeks leading up to this. But we can see pretty much right now up $42 in 8 weeks. Not that bad, guys. Up 4%. We see this is I'm tracking just VTI, ARKK, and my total stocks versus the total portfolio return. We could say ARKK kind of leading the way. I mean, that's to be expected. I'm not too surprised by that. Right now, we see everything's in the green. Everything's on the up and up. I'm pretty excited to add some new stocks this week. Last week, not so great in the market's down a little bit. Might be able to get some things on sale this week. The last month, up about 6.5%. Total portfolio value, a little over $1,000 right now. The last 3 months, up about 9.29%. I'll take that, guys. Pretty happy with the portfolio so far. What I'm going to do right now is I'm just going to put 150 bucks in. Then I'm going to put my $50 into VTI and ARKK before we talk about the stocks. The first one, AT&T, guys. If you've been following my channel for any amount of time, over a day, you know what a huge fan I am as far as being a dividend stock. They were my first wheel stock. I love to trade options with them. I know they have a ton of debt, but I think as far as a long-term dividend play, right now I think they could also go up a little bit if they make some moves, they get rid of some debt, they manage it a little better, especially over the course of the year. It's kind of like hurt me so far not to have AT&T in there. I'm also a huge fan of Verizon, but I think right now I'm ready at this point in the challenge to add AT&T to the portfolio. I'm going to put $10 into AT&T. Now, I promise they all won't be that boring, and I promise the Discord chat, I promise I'll shock you. I'll make you go, huh? At the end of this video, I promise. But the next one, guys, is PayPal. I'm a huge fan of what they're doing and what they potentially could do, like in that tech space, you know, with Square and things like that. Zoom's been great, but I still think that PayPal can really, you know, still continue to go. They're on the up and up. Like if let's take a look at what they've been doing. The last year up 132%, guys. Last 3 months, like I said, most people would say
they're overvalued. They're too expensive. Don't buy now.
I'm not a big fan of waiting. I like to be in. Time in the market is better than timing the market. So $10 PayPal is going into the portfolio. $30 left, guys. Another one is an old favorite of mine before I sold off some of my stocks to max out my Roth IRA at the beginning of this year, and that is Pfizer. I'm going to be adding Pfizer into the portfolio. Them and AbbVie, they're old close friends of mine. If you go back and watch some videos, I talked in length about, you know, how I feel about these particular stocks, and we know Pfizer's been in the news. I'm not even so much worried about like the vaccine and that being their driving force. I think they have a lot of things working for them. So without getting too much into detail, guys, I am going to add Pfizer. If you want to know more about it, like I said, shoot me a message. I'll be sure to link an old video where I go in depth about Pfizer, and my feelings since then have not changed. So $20 to go, 2 more stocks to add. I'm going to add $10 more into this next stock. Very, very similar to a stock I already own. Pretty much a toss-up. One of those like, hey, why can't you just own both? I know a lot of people want to pick one or the other. I picked one just because of the votes, and I didn't really talk about it, but I think these companies are both amazing companies. I own Visa, and I also want to own MasterCard, so I'm going to throw MasterCard into this. I think a nice like dividend growth type of play for the portfolio, and what could happen if things continue to open and the economies get back going and people start spending more money. I think we could see a little bit of growth, a little bit of pop in MasterCard, so I'm going to buy into them now and see where it goes for the rest of the year. All right, the last stock, guys, and like I said, this is a little bit for shock value. I'm not going to lie. I have said time and time again that I will not purchase or I do not mess with planes, trains, and automobiles. Yes, I own Tesla, and I'm like, okay, well, that's a little bit of an automobile company, but I also feel like they're kind of not. That was kind of like my argument with it. But I tend to avoid planes, trains, and automobiles. I just don't really have faith in what they can do. Yes, they're always going to get bailed out, but that doesn't mean their company fundamentals, like if they stopped getting bailed out, what exactly would happen. And this particular company ended up in the news again today. Not for good reason, but like I said, I kind of just want to do it because somebody made a great point. They say, Brad, you don't mess with planes, trains, and automobiles because they're a risky play, but yet some of the things that you have in your portfolio, like Plug, like Neo, these are risky plays. Why can't you get on board with a little bit of planes, trains, and automobiles, as maybe just a risky investment to see maybe if they could bounce back? And yeah, that's true. Like maybe I am being a little bit closed-minded, and I don't want to sound like a hypocrite and go against my word. This is more of just like me trying it out, right? This challenge is about learning things and trying. This is by no means like my real portfolio. And like I said, that you shouldn't be doing what I'm doing. You should be learning along the way. And maybe I'll learn something and go back and thank my Discord members for driving home planes, trains, and automobiles with me. Or maybe I'll be right, and at the end of the year, it will have not been a good investment. But that's what we're going to find out, and we're going to learn. So the last stock I'm going to add to the portfolio is Boeing. If we look at the last 5 years, guys, and there was a bunch of airlines I could have chosen. I definitely didn't want to go with like cruise ships and things like that. It was definitely going to be an airline, but we see they had really, really good growth, and then boom, they've just never recovered. And I think out of all of them, they have the highest chance of recovering back to somewhere around here, which I'm hoping for the end of the year, somewhere in that 375 range. We could see that they're trading pretty flat right now, but nothing's really opening up right now, so I'm not too surprised by that. Over the last 3 months, it's up 6%, not even trading flat, a little bit of a peak, a little bit ups and downs, a pretty volatile stock right now. They do pay a small dividend, not to be messed with. Over the last month, up 2%. Last week, okay, starting to make a rebound. We'll see what happens with the news of that engine catching on fire yesterday. Said accidents do happen, I guess. It's not really, I guess it is their fault, but I don't think it's something that we have to worry about on a reoccurring basis. Pretty much trading flat in the aftermarket, but up 4% on Friday. So yeah, let's add Boeing and let's see where it goes. So right now the markets are closed right now. It's Sunday night. When the markets open tomorrow and everything is actually fulfilled, these are queued up right now, but once they're fulfilled, I will update this spreadsheet and I'll post it right into Discord, guys, so you can see it. If you want to be a part of that conversation with a group of over 350 like-minded people talking money, talking options, stocks, buys, news, and everything in between, I will leave a link for that down in the description below if there are some spots available. Speaking of which, I do want to get in there and I want to answer a couple questions from that particular Discord group. So I asked them to tag me, guys. We'll get through as many as we can. First question, what are your top 3 priorities that you do with premium that you make from options trades? Really, I don't have 3 priorities. I essentially do the same exact thing with my options portfolio inside Robinhood. I have a separate portfolio just for trading options. That's all I use Robinhood for. All of my premiums get reinvested into making more options trades, learning more things and doing that. I usually raise it up to about $10,000, and right now it's at about $8,800, about $9,000. You'll see when it gets to 10, I take all of that money out and I reinvest it into my non-speculative investments, and then I start from 5 and build it up and repeat, and that's essentially all I do with my premiums. What criteria do you have when picking stocks for the poor man's covered call? I've gone back and forth with the poor man's covered call, and if you don't know what that is, guys, maybe I'll link videos that kind of talk about each one of these down in the description or the comments below. With the poor man's covered call, I want a stock that I am pretty confident is going to trade upwards on a steady, predictable path. I want to avoid volatility. I got myself into trouble trying this with VUSI. Then I go to make my covered call against it and it rockets past that and I risk assignment. And right now, even I'm rolling that out and I'm a little bit low and down. Actually, I'm not profitable right now because I picked a stock that could moon. So I'm definitely going to try and avoid that. And I definitely don't want a stock that's going to trade flat or downwards. If it trades flat, I'm going to lose money in that value of my leaps because of extrinsic value and theta eating away at that every single day. And then obviously if it goes down below and it expires worthless, I'm going to lose my entire premium. So I really love like blue chip, dividend growth stocks, some of the ones that are inside the portfolio we just talked about. Those are the ones I really, really like. The ones that I'm confident in 2 years that I can kind of predict that it will be in the money. I can then choose my strike price according on my leaps. And then I can also predict my covered calls against that with pretty good confidence. Silver Fox says, I know ETFs are long-term investments and we are looking for steady growth, but shouldn't we try to drive our cost basis down? Last week was a prime example to do so. ARK and VTI both dipped tremendously throughout the week. That's true. Basically, the question is, if I have to buy into a dip and drive down your costs, would you, rather than blindly investing on a specific day, maybe deposit some into your buying power? Okay, I get this question a lot. Brad, why are you just investing on Monday? First answer, time in the market is better than timing in the market. I tend to never hold cash waiting for an investment or waiting for a share price to do what I want it to do. It just never really works out for me. And here's the second part to that question. Over the long term of a year, this is a year, but over in my real portfolio in the terms of 5 or 10 years, these little dips up and down 1, 2, 5%, they mean absolutely nothing to me because I know that today's lows are not the next day's lows possibly, and today's highs are probably not the future's highs. So I don't really worry about it on a day-to-day basis. There's nothing wrong with dollar cost averaging up or down. I tend to be a lump sum investor. Like I said, I believe that time in the market is better than timing the market. You can Google what will happen if you missed even 3 of the best trading days in the past 5 years and see how your portfolio will be different. I'm more about consistency and keeping that consistency. If I put buying power in, now I have to watch the stock market. Is today the low day? Is tomorrow going to be even lower? Who knows? It's just easier to say, Monday, I'm going to make an investment. Doesn't matter what the price is. If I like the company and think it's going to grow, I'm good to go. When receiving dividends, do you enable the drip investment? Pros and cons to this. I tend to, especially in my long-term portfolios, just because of that, because they're long-term. When I was trading the wheel with something like AT&T, I turned off drip because I had 100 shares and I got to 100 shares so I can sell covered calls against it. Once I got to 100 shares, I really wasn't concerned with having 101 shares. So I turned off drip, took that money and invested other things to build up my wheel strategies. But that's really the only time I would not take drip. Or if I needed the dividends to live off of one day when that happens, yeah, I'll turn off drip. Brad, talk about why you're not choosing American Airlines. Like I said, not a big fan of them, but I did just put them in. So I knew that would kind of be a shock, maybe a shock here. I didn't choose them because I do not have faith that they will recover as fast as Boeing will. If it wasn't Boeing, it probably would have been American Airlines. With only 4% of your net worth in options, why do you stay away from riskier investments? Using a portion of the 4% of your net worth, this could increase profits. Guys, definitely. Like I said, I'm just a little bit of a boomer investor. I like security. I like not having to monitor the markets every day. I have faith in my long-term investments. I have faith in where they're going to go. And I just believe that like if you have a strong foundation, you can stand on the roof of a weak house. But you can have, if you have a weak foundation, but your house is like really, really great, I don't want to stand on the roof of that, if that analogy makes sense. I'm at the point in my life where I've been a gambler. I've risked money. I was a poker player. I lived by Vegas. Like I said, I'm just trying to get away from that gambler's mentality because in the long run, over the course of 5-10 years, even when I was a good poker player, I always lost money when I wasn't conservative, and I just don't trust myself, frankly, to be a little bit more risky than 5 or 10% in individual stocks. And also, I do believe wholeheartedly that total stock market index funds like VTSAX will get the job done. Malakrik says, what are some trades that you've lost money on and how have you learned from them? The first one was Wells Fargo. The lesson I learned was don't follow the media. I saw Wells Fargo climbing up, and I was getting ready to get into the wheel strategy, and I was super excited, and it was a stock that I could afford, and I was like, quick, I got to buy in before, it continues to grow, and I watched it, and I finally bought in. I bought my 100 shares without doing any research on the company. I had no reason to understand why it was going up, and then boom, I pretty much bought in right at the top. And then I was stuck bag holding it because I did not do my due diligence on why that particular stock was going up, Wells Fargo. So that was like one trade that I just rushed into covered calls. I just rushed into wanting to trade options when I really should have maybe picked a different stock that was maybe more expensive but had better fundamentals and now fit a better philosophy. So that's kind of what I learned from that one. Like, don't just rush in just to do it. I've got myself caught into spreads. Spreads can they're so tempting because the collateral can be so low. And like I said, once again, I learned how to avoid greed, but even when trading spreads, I learned the Greeks, because if I would have known more about delta and theta and things like that when I started doing spreads, I probably would have been a lot better off. But like I said, lesson learned. And I also learned in spreads that don't try and do the same mistake again to get your money back. Like, I lost some money with, I think MasterCard a long time ago trading spreads with them. And I was like, I'll get it back. And I tried even a riskier play to try and break even. And I lost again. And then I just had to cut my losses. So I learned there, know the Greeks first and foremost. And yeah, that spreads. I'm not a huge fan of spreads because with the wheel and stuff, at least when you lose, you get stocks or money. Spreads, when you lose money. So I kind of learned spreads are not as easy as they look and shouldn't be as tempting as they look. For the challenge, since I started late, I don't have 50 just yet. Is it okay if I do? Yeah, guys, do it with whatever amount of money you got. Great Cloud, yeah, just $1 is fine. Like I said, I think the overall message of the challenge is to stay consistent. That's really, I think, what's going to be best. Doesn't matter if it's $1, $10, that's going to be absolutely fine. Brad, I love the video on the Greeks, but can you explain Ivy Crush a little bit more in depth? Any indicators that you are about to get punched in the financial stomach? Thanks again. It really can't be answered quickly, but I'll try and dive into it. I'm going to do a video on Ivy Crush. Guys, implied volatility is just how volatile the stock is, and that's going to affect the options price. And indicators are just our earnings approaching is the main time we're going to talk about Ivy Crush, which is implied volatility crush. Essentially, when we go into earnings, there's a lot of unknowns, a lot of volatility, which makes the options price and value increase. As implied volatility goes up, option premium goes up as well. So as we approach earnings, right, that volatility is going up, earnings are going up, premiums are going up, premiums going up. Well, if you're not paying attention to the earnings date, and say it's 3 days out from earnings, and you buy an option, you are going to pay $900, for that particular option. Earnings come out, there's no more volatility. We know if they were profitable, we know what the company did, we know what they're doing. All that volatility goes away. Okay, implied volatility drops to the floor. Vega, which is the Greek that affects that, and Vega is actually not a Greek symbol, but it's part of the Greeks, okay? So Vega now is going to decrease. It crushes down implied volatility, and that premium price that was so elevated because of that implied volatility before has now dropped that options premium, and your $900 premium is now worth $800 or $700 or $600 or even $500. So if you had to sell to close that, now you're in the hole, $500. So it's just a good idea to, as far as indicators, don't buy options as earnings approaches. That's kind of like a beginner's rule of thumb. But we want to watch out for high implied volatility all the time, but specifically around earnings, because after earnings, a lot of that volatility or that unknown goes away, which crushes down implied volatility, and with that crushes the premium value of your option. In addition to deltas, do you use technicals when choosing your strike and expiration? Since the covered calls are short-term and bearish sentiments anyways, I personally do, hence why I ask. Yeah, I kind of look at everything, guys, and more things that are more important than others depending on the different types of trades, guys. Strikes are just pretty much dependent upon my basis when it comes to covered calls and cash secure puts. In the poor man's covered call, like something like a debit spread or something like that, I'm going to make sure I'm going far into the money. That's kind of like where my strike is, but that's more going to be what delta is as opposed to what the strike price is. Same with the covered call and the poor man's covered call like that. Expiration, once again, I'm going to watch out for theta. So whenever I'm selling options, I'm going to try and be within that 30 to 45-day window where theta starts to increase, decreasing the value of the option so that if I want to buy to close, I could buy it at a lower price than I sold it for. And the reverse, when I'm buying options, I'm going to keep expiration a little bit far out so theta is more on my side. You mentioned in the Average Money podcast that you prefer to have tax deferred versus upfront Roth in a tax advantage account, but I didn't hear you expound upon. It's also entirely possible I misheard you. What is behind this preference, particularly if you are growing your investment portfolio and wealth over time? It stands to reason that your income and taxes will be higher once the investment snowballs and a much larger basis. Yeah, I go back and forth between having tax deferment and a Roth, and I kind of just try and stay in the moment and what I think is going to be best for me now. Granted, I am investing for the long term, but I don't know what's going to happen. And I think right now, deferring taxes and using that tax savings, investing it, paying off debt or doing whatever was just a greater benefit to me than in the future. I probably will be taxed more with my pension, side hustles, real estate, things like that. But we also don't know what's going to happen with taxes in the future, which is another reason why people love the Roth, because they're like, that takes that unknown out of it. To be honest, there's most days where I wish I did the Roth. But I think it's also the traditional. I've been doing it for years. It's kind of working for me. And if it ain't broke, don't fix it. And like I said, I really like that tax deferment. I like having my taxes lower now, getting that tax savings now, and putting that money to work now. Because if I put that tax money to work now, it can compound over time. And generally with the money I save in taxes with my investments, it's going to grow more than what I'm going to pay in taxes later when I take that out. And also I'm going to be able to withdraw that money as I need, keep my income low, things like that. It's really a toss up and there's no right or wrong answer. It's really just personal preference. And the last question, now that ARK has invested in VUSI, oh gosh, right now it's all-time highs. Are you more bullish or less bullish? Do you let the decision of the pros like Cathie Wood weigh on your decision making? I think I know your answers, but I'm curious to see if I'm right. To be honest, no. I am bullish on VUSI for more reasons than Cathie Wood or Elon Musk could ever tell me, especially with the research that Aaron here has helped me with. There will be a video soon. We joke in the Discord because I've made it, but it's not YouTube ready. I think with Cathie Wood getting on board and her high profile, I think people are really ready to see that video. It will be coming out soon. I think their technology in the commercial space has been awesome. Now that it's going to be coming to the public sector and things like that, I am just as bullish. It didn't really affect it. It did make me excited because I think the price will drive up a little bit, but I think the price was going to be and the targets that I had for that price really had nothing to do with if somebody like Cathie Wood picked it up. I said, I think fundamentally the company is going to go up and they are going to reach even more time highs. I don't know how high that's going to be, but I think it's safe to say that our highs today in this low 20s is not where it's going to be. And it was going to get there, in my opinion, without Cathie Wood. I hope that's what you think. I thought I was going to say, like I said, there's some excitement. I'm glad it's in the news. But with my $5 calls that we made back in December, those are doing really, really awesome. I think I also have a $7.50 call on them as well. But yeah, no, I'm not too concerned with it. Guys, thank you so much for your questions and thanks for sticking along for the ride. If you stuck around this long, guys, put in the comments a good old thumbs up emoji so I know that you're sticking around for the entire video and that you enjoy, Q&As like this. If you want me to do it more often, maybe in a live stream, let me know down in the description or the comments down below as well. Till I see you guys in the next one, stay positive, work really, really hard. Always, please be kind to other people. Hope you have yourself an amazing day and even better tomorrow.